Good evening, everyone. Welcome to Hit the Bids Weekly Recap. Tonight we're going to be going over last week's action and events, seeing how Week 14 unfolded and how it can guide us going forward as we navigate these volatile markets. So let's dive right in. As a whole, we saw these each of our markets here trading in wide ranges and digesting this recent tariff news. We started off the month on April 2nd with Tariff Day, really shaking up a lot of these markets. Big breakdowns, lots of limits being tested across multiple markets, and key levels being broken. Lots of fear and panic being pulled into these markets here as we digest this recent breakdown. We did see pretty good support step in throughout the week. There was some wide, tricky ranges to be a part of. However, prices did just trade sideways and slowly start to tighten up by the end of the week in a couple of these markets. We did see our cattle market find pretty good support. Here on the live cattle market, we did see an undercut of the 50-day average and a pretty wide range trade below that. We did see the low of the week come in just shy of $1.92 and push us back up above our average there briefly in the middle of the week. We didn't close the week above the 50-day average, but this was a constructive sign as we do see here on a lower time frame. We've got pretty equal distribution across last week's action, seeing value area lows getting bought back up and closing this market back up near the value area highs. We do have some levels here that we see going forward that can guide us. The bulls need to get bids above $1.9750 early this week to keep the momentum. But we do need to take out and get a close above these weekly highs at $1.9940 to really confirm this next leg in this big picture uptrend. As a whole, we are seeing pretty supportive action, but the bulls just need to see some confirmation above these levels, our bull pivot and our prior week's high. Price above the 20-day average would signal us into a strong uptrend. We do have the weekly uptrend here, but as we trade around these averages, we just want to make sure that this price is setting up and creating good risk points and carrying us higher with momentum above these recent highs. So look for the bulls to come in early this week and try and push this thing higher as this cattle market does remain strong. However, lots of headlines out there could continue to provide volatility, and we could see that go throughout all these markets. So we're bullish here, but as long as we're trading around this 50-day average, I do urge people to stay cautious if we are trading below that. But look for these early levels to get broken and look for the bulls to keep pushing us higher in the week ahead. Next up, we got our feeders. Very similar action over here last week. Little over $12 range trade. Early, we did see a $10 range on Monday alone as we shook out below this 50-day average. As you can see, we did have this breakdown below the 50. However, lots of volatility, and we did get a pushback and a weekly close above the 50 and that 275 level, which was key. These are all good signs for the bulls here, closing near the weekly highs. On a lower time frame, we do see a pretty equal distribution here as well, and price closing up near 279 near the highs of the week. This is a good sign showing the bulls are confident in this market, closing it higher. Just need to get that confirmation follow through breakout above 279.42 and the 20-day average to really get the ball rolling higher and keep the momentum on the bulls side. So above that, we would see these bulls try and kick in and start that next leg and potentially head for that $3 mark that we've been keeping our eye on for the last few weeks. So wide ranges, look for that volatility to stick around, but in the meantime, it looks like the bulls are setting up nicely and should be carrying this cattle market higher. Next up, we have corn. Corn was an interesting one we've seen this month. Following the April 2nd Tariff Day announcements, we did see an early gap lower on that evening open. However, that was the low for this month. We did see relative strength stick around here as this market was in a downtrend, but we did see that relative strength stick around as a lot of these other markets were falling apart. Corn was staying steady and trading back above its 20-day average. When we see the broader market seeing weakness and fear come in and sell off a lot of those other markets. If we see a market that's staying green and positive, that's usually a good indicator of relative strength and a market you want to be involved in on the long side when the market finally does rebound. So we did see a breakout above that 470 level and reversal above that 50-day average. This is a big win for the bulls here, as this uptrend looks like it's taking off, and we've reversed the downtrend. Bulls did get up to 490 last week. We could see that momentum carry us up into the $5 area early this week. However, after about 7-8 days of upside, we could see some resistance step in here as the bulls start to run out of gas. However, dips, as we're trading above the 50-day average, we do expect dips to be bought. So look for support anywhere above 470 this week. If we get back below 470, that would have us back in neutral territory as we look for this market to make a decision. But in the meantime, all signs are pointing up, and the bulls look to be strong and in charge here. So look for dips to be bought and this market to keep grinding higher. Next up, we got crude oil. Crude oil saw a volatile week as well. This is another market that spent the week trading in a wide range as it digested this recent breakdown from the start of the month. We did see prices trade as low as $55 and back above $60 last week as we traded in a wide range. This market does remain in an overall downtrend. We also see on a big picture weekly time frame that we are at new yearly lows. This level here around 65 that has kept price supported dating back to 2021 gave out in pretty quick fashion. This is a sign that the bulls are on their heels and the bears are in control. So expect the selling to resume. We did see extremely oversold territory with that test down to 55. So wouldn't be surprised to see the bulls push this thing back as they come back for air, and we see some short covering come in with some of these prior daily highs being broken. Above 61.87 to 62, I'd expect to see a rally come in and price push back up towards the mid 60s and the 20-day average here at 65. That would test these prior lows and offer a really good spot for resistance and those bears to step back in and continue selling this thing. Near-term upside is definitely a possibility, but expect rallies to be sold into as the downtrend remains control, and we are below this key level of 65 that has been a key level for many years now. So anywhere below 65, look for the bears to be in control, but a near-term rally could be seen as we are coming back off of oversold conditions. Bears are in control. Look for a better place to get short this week as prices continue to rally. If they don't and we get back below 59.50, we could see the selling kick back in a hurry, and this thing could really get slippery to the downside. Last up in our equity markets, here's our S&P 500. Last week we traded in almost a 700-point range. We did see midweek pause on the tariffs definitely sent this market higher in a hurry. We went from being down below 4,900 to 600-point range day, with that market rallying back to the 20-day average all in the same day. This prior low right around 5,500 proved to be resistance, as the next day we did see continued volatility in another 400-point range, 380-point range. This market is still not very healthy. We are seeing some wide swings. That 10% up day is not something that is natural or normal in a healthy market. Expect this volatility to stick around as we remain very headline driven. Anywhere below our 50-day and our 200-day averages, expect the bears to remain in control. Lots of our underlying components and mega cap stocks that control these indexes have pretty messy charts and have a lot of work to do before they can get back into a sustained uptrend or even in bullish territory. So I encourage everyone to remain defensive. If you're in the equity market, let these markets tighten up and find support, and any long-term uptrends are going to come above this 50-day average, and so we still got a lot of work to do before we can get there. In the meantime, expect that volatility to remain. We do have Jerome Powell speaking this week, so more volatility is expected to come. Not not seeing that slowing down anytime soon. So, but in the meantime, stay defensive and wait for smoother seas. That's all we got for today. Thanks everyone for listening. Have a good night.